What's going on, traders? Welcome to another video. Today is April the 5th, 2020, and this is the March 2020 monthly trading review. First off, I want to thank all new subscribers. We have passed 100 subs, and I think currently we are at 109, approximately 109. And so thank you for everyone who is subscribed, and I hope you're enjoying the videos and you're finding value in my videos and also the monthly reviews that I put out. If you are new here, please feel free and welcome to sub. We put out monthly videos of my trading progress and also some trading updates and analysis and order flow videos as well. So welcome. So March, I traded crude oil exclusively. March, there was carry forward volatility from the whole market meltdown from coronavirus, translated into crude crashing prices 30% overnight, from the 50s, 40s down to the 20s, bottoming out I think in around $19.70 something cents. And yeah, it's been very volatile. There's a lot of movement and a lot of trading opportunities. Having said that, though, the volatility did pick up at I feel like at the beginning of March, the first 2 weeks, and then the latter half of March it kind of started dying off, and moves were not as how can I say, didn't have as much follow through. You can see big gaps and whatnot through overnight, and but near the last half of the second half of March, you can see a lot of less movement, but also more sideways action. Market was looking like it was trying to make a decision of whether it wanted to go further down or was this the bottom. And when I say not as much movement, I'm speaking relative to previous price action. I don't have charts from all the way from the top, but basically what I mean is, like you can see here, the ranges are starting to get tighter on the daily range, and only in the last 3 days or so, 2-3 days, this is now in April, price started popping again. So who knows? We're not sure if this is the bottom. However, there was news coming out from OPEC Plus and also Saudi Arabia and Russia coming back to the table. So a lot of newsy type of movement, which is fine. Gives us price action that we can trade off of and opportunities. But what's happening is that it's hard to find trading days where there's continual follow through, and we shouldn't expect that. I mean, market needs to push and then rest, push and rest again. So it's just about finding those spots and being picky about your trades of how you can take advantage of the volatility when it comes in. Okay, so some of the things I did well here on in March, I focused again on taking valid trade setups. I focused on precise entries. Continue to use my trade log to give me some better stats of how I can have more precise entries, and also how I can target and maximize my profits. And again, I forced myself to stop trading when I didn't feel like I was in the flow or I wasn't in sync with the market during the trading day. And I'll show you some of the stats here. So this is the stats for Price Tracker. I ended up a net after commissions and costs, a whole negative $16.52, and with a slight positive expectancy of 0.44 ticks per contract per trade. This is a gross expectancy, but you might be wondering why. Hey, how come I had a negative outcome when I had a positive expectancy? The negative P&L is inclusive of all costs and commissions. So I spoke a little bit about focusing on taking valid trade setups and reducing errors and whatnot. I did have 6 errors in the month of March, and I do track the cost of those errors. And you can tell, like, if I didn't make these errors, I would be net positive. So there are six trades where I made an error, whether it was a FOMO, a chasing, bad entry, incorrect order execution. I think there was one trade where I clicked. I thought the order didn't go through, so I clicked again, and basically I had more than double the size basically in the market, and it got executed, and I panicked and I basically closed out the trade because it was a bad execution on my part. And yeah, it basically, I think it wiped out all my profit on that day, like within seconds. So trade errors are big. Those continue to be my kryptonite, I guess you can say. And it's definitely hard. Like, I mean, I have 138 trades in March and 6 errors. It's not terrible, but of course you can see, like, when you start tracking the errors and seeing how much it actually costs you, then it becomes quite important, and it can drastically change or impact your results on a monthly basis. 60%, basically almost a 61% win rate, which is also my scale out, because I really just trade one contract, so those two numbers are going to be the BSO, and the win rate's going to be the same. So Fridays, basically Fridays are not my best day. Those are my worst days. The Thursdays are my best days. Wednesdays, EIA, apparently not the greatest. So I think I have to continue to just be careful what the trades, the time of day I trade, and also ensure that there's good relative volume coming in, and momentum, so my trades have a better chance of following through. So you can see my equity curve here, well, my net P&L. So I was, like I said, the first half of March did present more volatility, and I didn't do the greatest. I was down over a G, and this is all, of course, with one contract. I'm not trading a big account, so down over a G, and then basically came back and finished off kind of like sideways. So and that reflects through my net P&L. Yeah, there's some couple days here, like a big losing day, some bigger winning days, but overall, I mean, 60% win rate's not the greatest. I need to get that up, but I'm still working on those traders, still working on being precise and being disciplined and taking proper trade setups. So yeah, work in progress. I mean, compared to February, I think I was up over 1100, and this month for March, almost break even. I suppose it could be worse. Some things I'm gonna watch out for next month. To wrap this up, try not to make this video so long. Focus on eliminating errors, of course, and also continue to focus on taking valid trade setups, no chasing, and being precise with my entries, and continue to remind myself that if you miss something and you didn't get filled on a trade, or you weren't watching, that there will be opportunities. However, those opportunities are not always going to show up, but when they do, you need to be able to spot them. So it's kind of a balance of telling myself that don't have FOMO because there will be opportunities, but you also need to be diligent and focused to watch for those opportunities so that you can take advantage when they do come again. Because I find that staying concentrated and focused on spotting those opportunities again, it requires a lot of concentration, and you have to be on the ball. Otherwise, you're missing those trades, and when you do miss the trades and you don't find opportunities, and it's kind of like a downward spiral. When you do see an opportunity that you weren't focused on spotting, and you see it and it's too late, and you chase again, it's kind of a vicious cycle, so to speak. So yeah, I'm just gonna continue chugging along in April. I hope you had find some value from these trade reviews. Please leave any questions that you may have below in the comments. I do try and my best to answer every single question. Whatever about trading, about platform, about data feeds, brokers, futures, anything. Thanks for watching, and I'll catch you guys in the next video.